On Friday, June 12th, the biggest IPO in the history of the stock market actually happened. SpaceX, ticker SPCX, went public on the NASDAQ, and by the time the closing bell rang, Elon Musk was, on paper, the world's first trillionaire. But here's the part almost nobody is talking about. While SpaceX soared, the rest of the space sector got absolutely torched. And that one detail tells you exactly where the smart money is heading next. Welcome back to QuietBull. Let's get into it. Start with the debut itself, because the numbers are historic. SpaceX priced its shares Thursday night at $135. That offering alone raised $75 billion, making it the single largest IPO ever recorded, blowing past Saudi Aramco's $26 billion back in 2019. Friday morning, the stock opened at $150. It ran as high as $176.50 intraday. That's a 30% pop as before settling to close around $161, up just over 19% on the day. That puts SpaceX's market value at roughly $2.1 trillion, making it the sixth largest public company in America on day one. More than 500 million shares changed hands, nearly matching Facebook's debut back in 2012. This was not a quiet listing. This was a financial event. Now the retail story, because this is the part that matters for people like us. SpaceX targeted a retail allocation near 30%. To put that in context, a normal IPO gives regular investors maybe 5 to 10%. Reported retail orders topped $100 billion. And on Friday, SpaceX was the single most bought stock by individual investors in the entire market. Net buying ran at more than 3.5 times NVIDIA. This was, by a wide margin, the biggest retail IPO debut we have seen in years. The demand was absolutely real, but here's the twist. While SpaceX was flying, every other space stock fell off a cliff. Virgin Galactic dropped somewhere between 28 and 37%. Rocket Lab fell almost 11%. Intuitive Machines, AST SpaceMobile, Planet Labs, Redwire, EchoStar, Firefly, all down double digits. The Procure Space ETF, which tracks the whole sector, fell 7% in a single day. And here's what's strange. Nothing broke. No bad earnings, no failed launch. Planet Labs had literally just posted its best quarter ever. So what actually happened? One word, redistribution. Analysts are calling it the siphon effect. Before Friday, if you wanted pure play exposure to space, your choices were limited. So money piled into the small names. Rocket Lab, Redwire, AST. But a lot of that money was frankly a placeholder. Investors were parking cash in the little guys while they waited for the main event. The second SpaceX started trading, that capital rotated straight into the heavyweight. And this is the lesson I want you to take away. Blockbuster IPOs don't create new money. They move existing money around. On Friday, SpaceX vacuumed it up. So what do I think happens from here? 3 things. Number 1, short term, expect more volatility and more pain for the small caps. This rotation is not finished. As long as SpaceX is the shiny new object, the little guys stay under pressure. But, and this matters, watch Rocket Lab specifically. It joins the NASDAQ 100 on June 22nd, which forces index funds to buy it whether they want to or not. That is a real, mechanical catalyst sitting right in front of a beaten-down stock with a neutron rocket launch on the horizon. In my view, Rocket Lab is the most interesting name in the entire wreckage. Number 2, be honest about the valuation. At $2 trillion, SpaceX is trading around 100 times revenue. That is priced for absolute perfection. And understand what you're actually buying. The bull case here isn't really rockets. It's the plan to put AI data centers in space and launch over 100,000 satellites. This is the AI infrastructure thesis wearing a spacesuit. If they deliver, today's price looks cheap a decade from now. If they stumble, there is a very long way to fall. Some analysts already doubt the stock can even double by 2027. Number 3, and this is the biggest signal of all, SpaceX is just the opening act. OpenAI and Anthropic have both filed to go public. When those names hit the market, the exact same siphon effect could slam today's AI darlings. Capital pulled out of the current winners to fund the new ones. Friday was a preview of how this entire AI build-out gets financed, and more importantly, who pays for it. So here's the bottom line. SpaceX's debut was a massive success and a warning shot at the same time. This market is rewarding the category king and punishing absolutely everyone else. For patient investors, the opportunity is not chasing SPCX at the top after a 30% pop. The opportunity is hunting carefully in the rubble it left behind. As always, this is not financial advice. Do your own research and size your positions accordingly. If this breakdown helped you make sense of Friday, do me a favor and hit subscribe because we do this every Tuesday and Friday. This is QuietBull. I'll see you in the next one.